Welcome again to my channel, The Hidden Journey. Am I the only one that didn't know investing in the stock market could start with just Rs 1000? Investing in the stock market might seem daunting, like a game reserved for financial experts. The endless graphs, the fluctuating numbers, and the complex jargon can make anyone feel overwhelmed. But here's the truth. Anyone can invest even with a small amount, like 1000 rupees. It's not about how much you start with, but about taking the first step. You don't need to be a millionaire to start growing your wealth. Everyday people, from students to working professionals, can begin their investment journey with just a small amount. Think of it as planting a seed. Over time, with consistent nurturing, it can grow into a mighty tree. Just like a sapling needs water and sunlight, your investments need regular contributions and informed decisions. Gone are the days when investing was complicated and intimidating. The stock market used to be a place for the elite, shrouded in mystery and exclusivity. Today, user-friendly platforms and accessible information have made it easier than ever to begin your investment journey. With just a smartphone and an internet connection, you can access a wealth of resources and tools. You can start small, learn the ropes, and gradually increase your investments as you gain confidence. Take the time to educate yourself, read books, watch tutorials, and follow market trends. Remember, the most important step is to simply start. Procrastination is the enemy of progress. The sooner you begin, the more time your investments have to grow. Don't let the fear of the unknown hold you back. Every successful investor started where you are now, with questions and uncertainties. With the right knowledge and a little bit of courage, you can unlock the potential of the stock market and pave the way toward a brighter financial future. Let's explore how. Together, we will demystify the process, break down the barriers, and set you on a path to financial independence. The journey may seem long, but every great journey begins with a single step. So, are you ready to start small and dream big? Now, you might be thinking, what difference can 1000 rupees really make? It seems like such a small amount, almost insignificant in the grand scheme of things. But what if I told you that this small sum has the potential to grow into a substantial fortune over time? The answer lies in the magic of compounding. Compounding is a powerful financial concept that can turn even the smallest investments into significant sums of money if given enough time. Compounding is like a snowball effect in finance. Just as a snowball grows larger as it rolls down a hill, your money can grow exponentially when you reinvest your earnings. When you reinvest your earnings, they generate more earnings, which in turn generate even more earnings, and so on. This cycle continues, and over time, the growth can be astonishing. Imagine this. You invest 1000 rupees and earn a modest 7% return per year. It might not seem like much at first, but let's see what happens over time. After just 10 years, your investment could grow to almost 2000 rupees. That's nearly double your initial investment, and it's just the beginning. After 20 years, it could be over 4000 rupees, which is 4 times your original investment. The power of compounding becomes more evident as time goes on, and after 30 years, it could balloon to nearly 8000 rupees. That's 8 times your initial investment, all from starting with just 1000 rupees. This simple example illustrates the power of starting early and letting your money work for you over the long term. The earlier you start, the more time your money has to grow. Of course, past performance is no guarantee of future returns, and the stock market does come with its share of risks. It's important to be aware of these risks and to invest wisely. However, history has shown that over long periods, the stock market tends to trend upwards. By staying invested and not reacting to short-term market fluctuations, you can benefit from this long-term growth. By investing consistently and patiently, you can harness the power of compounding to build significant wealth over time. It's not about making a quick fortune, but about steady, disciplined investing that pays off in the long run. So, start today, no matter how small the amount, and let the magic of compounding work for you. Ready to begin your investment journey? The stock market can seem intimidating at first, but with the right guidance, you can navigate it with confidence. Here's a straightforward guide to get you started, a step-by-step approach to help you understand the basics and make informed decisions. Step 1. Open a demat and trading account. A demat account is like a bank account for your shares, while a trading account allows you to buy and sell them. This is your first step into the world of stock trading. Several online platforms make this process quick and easy even for beginners. You can complete the setup in just a few minutes from the comfort of your home. Look for platforms with a user-friendly interface, low fees, and educational resources to help you learn as you go. These resources can include tutorials, articles, and even webinars. Step 2. Choose your investments wisely. For beginners, it's generally advisable to start with stable stocks of well-established companies or exchange-traded funds, known as ETFs. These options are less volatile and provide a safer entry point. ETFs are like baskets of stocks that track a particular index or sector, offering instant diversification. This means your investment is spread across multiple stocks, reducing risk. Step 3. Implement a dollar cost averaging strategy. Instead of investing your entire 1,000 rupees at once, consider a dollar cost averaging approach. This strategy involves spreading your investment over time. This involves investing a fixed amount at regular intervals, regardless of the market's ups and downs. By doing this, you can avoid the pitfalls of trying to time the market. This strategy helps to mitigate risk by averaging out the purchase price over time. It ensures that you buy more shares when prices are low and fewer shares when prices are high, leading to a balanced investment portfolio. Remember, investing in the stock market is a long-term game. Patience and consistency are key. Regularly review your portfolio and make adjustments as needed, but avoid making impulsive decisions based on short-term market fluctuations. With these steps, you're well on your way to becoming a confident investor. Stay informed, stay patient, and watch your investments grow over time. Happy investing. Section 4. Building your Rs. 1,000. Portfolio. A practical example. Let's put this into practice with a hypothetical example. Imagine you want to invest your initial Rs, 1,000, in a well-diversified ETF that tracks the performance of the Indian stock market. You could start by investing Rs 250 every month for 4 months. This allows you to average out your purchase price and potentially take advantage of any market fluctuations during that period. Remember, this is just an example and the specific investment choices and strategies will vary depending on your individual financial goals, risk tolerance, and investment horizon. Section 5. Mastering risk. Protecting your hard-earned money. Investing in the stock market always involves some degree of risk. However, by understanding and managing these risks, you can make more informed investment decisions. Diversification is key. Don't put all your eggs in one basket. Spreading your investments across different asset classes, sectors, and geographies can help to mitigate risk. Start small and gradually increase. As a beginner, it's wise to start with a small investment amount and gradually increase it as you gain experience and confidence. Invest for the long term. The stock market can be volatile in the short term, but over the long term, it tends to trend upwards. Avoid panic selling and maintain a long-term investment horizon. Section 6. Keeping tabs on your investments. Tools for success. Once you've made your investments, it's important to track their performance and make adjustments as needed. Thankfully, numerous stock tracking apps and websites can help you monitor your portfolio in real time. These tools provide valuable insights into your investments, including current market value, portfolio performance, and historical data. They also offer features such as price alerts, news updates, and research reports to help you stay informed. Section 7. Start your investment journey today. Taking the first step towards investing can be empowering and financially rewarding. Remember, you don't need a large sum of money to get started. With as little as Rs 1,000, you can begin your investment journey and harness the power of compounding to grow your wealth over time. Start by opening a demat and trading account, choosing beginner-friendly investments, and implementing a disciplined investment strategy. Remember to manage your risk, track your investments diligently, and most importantly, be patient. The world of investing awaits. Take the first step today and watch your financial future blossom.